Hello and welcome. Today's date comes in that of Thursday, the 16th of April, 2020. My name is Derek. This is the Money Charts channel. All bets, trades, and of the like within each his own risk and their own reward. Take a look at Bitcoin, silver, and gold. Starting off with BTC against the US dollar, which I can just, for something to do that. And again, for something to do that. Symmetricalness, indecision, yada, yada, yada. Today's session, it's up like 6.4%, but it really does remain in this correctionary move, supporting this area of resistance in which it encountered on March the 20th, the 24th, the 25th, the 26th, and the 27th. So supporting where it came from. There really isn't much more else to say about the situation. Yeah, on the hourly time frame, I drew this line in, which just represents, where's that line again? Right here, yeah. It represents this area of resistance, finding support. So it had this little move in here, this down move, April the 12th, and rallies to a lower high. And then, yeah, we'll call it a matching low, but not holding where it's supposed to, but it didn't break down after that. Meaning when it resisted here, this area of previous support last night at about the 66 change level, it resisted the lows, but it didn't go down. And then coming up to the highs, well, once it got above that, the 3 o'clock this morning, just a phenomenal 2-hour move, or finishing on the 4-hour stamp, the next one after that. And now just consolidating, but overall just holding in there, going sideways. Really, a lot of it has been yada, yada, yada. A big reason why there hasn't been as many videos on this channel. Now let's move it to silver, which is 15 3/4. At least according to this, you're not going to be able to buy physical silver anywhere, even close to this US dollar equivalent price. It is what it is. And within this market, what I have here, the gold one's not going to show up, but I got older data, which I'm going to be using after this. But I got data from like the early 70s. So we had, what was the original move here? Silver going from $1.25 up to 6 and change, and then this correctionary move, and then this final rally up to, well, it doesn't say it here, but I think it was up to 52. I got an exact number, over 49 high change as the LBMA closing levels, but from what the tails were, from what I heard, $52.50 was sold on January the 19th. We'll get to that day in a little bit, but not yet. Overall, it's had this long correctionary move. Whether you talk about this one, which, of course, started a bull run in here, and now what has been within this correctionary plan. It hasn't even been able to get out of this sideways consolidation, because every time this last half of the last decade managed to the upper end, which is pretty close to the 20 level, but 19 I think I'll call it. Of course, it was resistance. There has been major support here at about the 13 high change, as it found 14 low here, but then 13 high, and then again most recently at this 13 high levels. So still within this correctionary phase, which is not the case for gold on the same time frame, as it's above the 18 average of highs. And again, the data only here goes back to like 1975, but I'm going to show some other information going back even before then. Get excitation of the 18 average of highs on the monthly time frame occurred in June of last year. And since then, it has just managed to continue going very, very nicely. And then go look at this month in itself, which is the month of April, right now up 10%. After this very volatile outside month where the lows was back down to here. You have this high, which was higher than before. You had the close, which was pretty much the exact same. So we had volatility up and down in that previous month. So just by looking at it as is, there really shouldn't have been a surprise that this month, yeah, especially finding support at the rising 18 average of highs, that we have what we have going on. So what we're seeing here is the long correctionary moves. This gold did this, like that, then the big move. This is the correction, of course, down to these lows. But what I've done is I've taken a look at this on a statistical point of view, and I just calculated some data really quickly. So the 1970s versus 2000, and I just put one in case there's a second one later on. Don't know if it'll be a sequel. But the bull market went from January the 19th, bull market one that is, to December the 30th, 1970 to 1974. Almost 5 years in duration of time. The market move was almost $35 to almost $200, or about 5 2/3 higher. And then it had a correctionary move from December 1974 to that of August 31st, 1976. So there's the August 31st low right in here. And that correctionary move was between 1 2/3 of a year, and it lost almost half of its value, going from, well, basically 200 to 100. And then bull market 2, which is the 3.4 run from this low to this high, that's 3.4 years, from 1976, the end of August, so September, October, November, December, to that of 1980, January 21st. So I said 19th, I guess I meant the 21st. But anyway, the move was $103 to $843, or an 8.2 times gain from the correctionary move, and a 24 times gain from the 1970 low that took basically pretty much exactly 10 years, given that this was January 19, 1970, and 1980, January 21. So now comparing it to the current one, we have had the first run of the bull market last greater than 10 years, as it was February the 16th, 2001 to September 5th, 2011, for a differential move going from 257 to 1850, 7.19 times. So greater than this. This was almost 5 years, and then this was greater than 10, so taking less time. And this has been a longer correctionary move. And you could even say that this 4 1/3 year could even be longer, and I'll get to that in just a bit. But, well, from that same time of the top, September 5th, 2011, to December the 15th, 2015, it went from 1850 to 1050, losing 43%, which is relatively close to the 47.8. But not quite as much, and especially given that it's had a better gain than it did before, where this went up 5.68 times before losing almost half its value, and this one went up over 7 times before, well, almost losing half its value, but even less of a loss at 43. So that's, and now we move into bull market 2, but should I be going out stating that this bull market started on the end of 2015? And right now, it's already been 4 1/3 years, seeing the market go from 1050 to 17 3/4, or a 1.7x move. And of course, this one was an 8x move. And if we were to just have an 8x move from 1,000, that would be over 8,000. And of course, this was an overperform. Even this was overperforming. So, and then of course, how long it could take? Well, this has been a lot longer during this run compared to this, but the economic conditions were anywhere like we currently have now, in what we could almost call that of like an almost everything bubble. But as far as does it look like, okay, how long was this correctionary phase? When is the real bottom? And really, you can almost say, even though this is a higher number, but this low of 1167, you could almost say, well, we can count it from here. Or we could count it from this breakout time, or even this breakout time when it got above the 18 average of highs in 2019. So we could say, hey, the bull market started last May. So I guess it's all up for debate which one you would choose. Now, as far as the older data before this, again, I do have old gold data. And this is what the chart looked like during the entire 1970s run. And this is in a logarithmic form as well, I believe. Should have been. I calculated a log. So here's it going from like $30 to like 1,000. So here's the final, and then you look at the final spike here, how it broke this trend line, pretty much right around that 325, 330 mark here, and then boom, just a nice, really a 3x move just from the break, and really a quick period of time as well. So there's another spot where an uptrend line got broke. So you connect these highs in here. And as far as the dates, and this is the data that I got. So January 21st, 1980 was the high. And of course, this is current data, just as I was doing my looking at research information, because just as a time lapse, just again something I was bored, so I decided to do this. And we'll finish it with the gold to silver ratio, which is 111. However, good luck trying to get 111 ounces of silver with an ounce of gold right now. No, you're not going to get that many. Although you're going to probably get a decent amount. And I say that because of the premiums right now. The premiums are much higher on the silver market than they are on the gold for how much you are spending. For like, say an example, especially if you use like an eagle or a maple, and even any generic one, like the buffaloes or whatever, that has both gold and silver. Anything you compare like apples with apples for the most part, I suppose. But a gold bullion maple leaf versus a silver bullion maple leaf, or the eagle versus the eagle, divide the two, what you're really paying, that would be really what the true ratio is. Either way, it's managed to get up to 126. And I guess you could say, going back to here, am I surprised I went up to that? Yeah. And just even back before, well, last year I was thinking, yeah, it might go up to 150, simply for the fact that gold is probably going to be the starting leading indicator, the leading mover of the two during the bull market run, and then OMG on a silver run. And I've been saying this for a while. I'm going to say it again. Not only do I think we're going to retest this low, I think it's going to destroy this low to the downside. But that's what I feel. Your own risk, your own reward. But I feel in time, whether we go up to 200 first or whatever, I don't care how high it is, because the statistics that I went mainly refers to that of global supply, the demand for the silver based on the bullion aspect, as I think there's going to be people wanting to get it, but just not able to do it. And I can finally see why now with, of course, the shutdowns, how that would make sense. And I say that because I've heard things like the web bot for years. I'm talking like back in like here or whatever, saying, oh, there's going to be such a panic for people to try and have a hard time in doing so, getting silver. And I'm thinking, hard time. Okay, whatever. Okay, I guess I can see now how a hard time would come, of course, with supply issues amongst the global situation, as I feel we are now in the early stages of the greater, and probably greatest at this stage anyway, setting the bar, economic situation that we're forced into. We'll call it depression, if you will, as job losses. Let's just take a look at initial claims to finish this. I haven't even taken a look at it for like 2 or 3 days, but it's at like 6 million. So let's take a look at that. Yep, 6 million right now. It used to be 2/3 of a million, so it's 10 times higher than this previous level of resistance in here. And the amount of job losses right now are just crazy that are going to be coming in play. There's going to be a lot of businesses that are just not going to resume play, if you will, resume business when you're allowed to. Especially a lot of the nice little somewhat, we'll call it maybe 4-star, 3-star restaurants, even 5-star restaurants that would charge 20, 30 plus 18, $15 plates, at least Canadian dollars, and more, of course. I don't know how many people are going to be wanting to get back into the situation. And for sports, which it's been frustrating because that has been one of my better incomes, at least of late, within baseball and hockey, that it's gone. But one of the things that I was thinking about even before the early parts of the current situation, or we'll just even say early February, middle of February, was how the stadiums would go. Because a lot of times in baseball, you can have stadiums that can fill 50,000 people. Max attendance. And then we've been seeing, like, say, Toronto's Rogers Centre, and then you look at Baltimore, Camden Yards, and all these other different stadiums just having very low attendance. Maybe we'll get 17,200 people for this average game A. See, what I was thinking going in back again in February was, oh, this isn't going to be good. This is going to be low. Of course, a lot has been going on with words like social distancing, flattening the curve, all those types of speeches, and yada, yada, yada. But before those were popular words, I was thinking, okay, so now we got these 17,000 populations back in 2019 and 2017. Oh, these things are going to get crushed now. We're going to talk about like 8,000 because of the economy, but mainly because of course, that current situation. People are just not going to maybe want to be as close to another. And now that we've had all this happens, when these sports get back into play, how many people are going to really want to actually go to a Rogers Center and Camden Yards and Yankee Stadium and all those other ones like they used to? And you know what? Maybe the bigger ones that they will, Yankee Stadium, because, well, the Yankees are popular. How about Toronto Maple Leafs in hockey? This is like one of the sickest fans, the Boston Bruins. They're always going to fill out the games. And maybe that will still remain the case, but with less demand in a venue that's already sold out, well, that would just mean lower ticket prices. Anyway, thank you for tuning in. Have yourself a great day. Bye-bye.